Welcome to the Pure Infrastructure Podcast. The Pure Infrastructure Podcast is hosted by Pure Infrastructure, which is a managed cloud company in Nairobi that helps companies make a better return on their cloud assets. The podcast is sponsored by VMware, which is a leading software and software as a service vendor in the cloud and multi-cloud space. This is our 10th episode, and we are glad to have Ben Roberts, who's the Chief Technology and Innovation Officer at Liquid Intelligence Technologies. Welcome, Ben.
Thank you. Good to be here. Thank you.
So just as a start, just give us a background, a personal background. Who are you? How did you end up in tech? How did you end up in Liquid?
I'm Ben. I ended up in tech. I kind of worked, I studied physics, but I worked in a couple of different types of tech companies. But first of all, I was developing components, then moved on to developing systems. So that was radio paging systems using satellite communications and multiplexing channels over satellite. Then technology moved on, and suddenly radio paging was completely irrelevant as soon as the first SMS was sent. And then I moved into more satellite systems, working on mesh networks and how to connect remote areas, and started working a bit in Africa. Then into a new technology, which was voice over IP at the time, which was quite new at the time, and it was very much used in the early days. It's now, the basis of technology of WhatsApp calling and things like that. But it was very much used and still is for trunking of voice calls over international networks, and challenging existing business models that were there in Africa as well. People would use it for even bypassing, exchanges and things. So really, that brought me into those experiences. Brought me to working for Liquid, which is I joined in 2002 as the first engineer, and really having a background of satellite, voice over IP, integrating networks. We were just starting up as a network for Africa, based out of United Kingdom. But kind of that sort of skill set was what brought me into the job, and implementing those technologies straight away from the box, out of the box into live production.
Wow! And so it's been 19 years.
19 years, yeah. Yes.
Wow. Yeah. And you've touched on Liquid. Just give us a background on Liquid Intelligent Technologies, and just sort of cover initially just data centers, the core telco business, and the labs.
Thanks. Yeah. Look, so we started out, as I've alluded, we started out doing voice and satellite, and we've seen a number of big shifts in technology, particularly in Africa over the period of time that we've been operating, and couple of those really big megatrends are around shifting of voice to data, is a huge trend, and shifting of satellite to fiber. However, satellite is still a massive industry. It's still a very big business for us, and we've just moved our satellite side of the business to from trunking to access. Instead of having a big dish in Nairobi picking up satellite signals, we've got hundreds of dishes all over Kenya picking up satellite signals. So more in small facilities on schools or healthcare or county offices, that sort of thing. But we came to building fiber in about 2007, 2008, we saw this shift in technology. So we predicted what was going on. We saw that, the main cities of Africa would no longer require satellite communications as their backbone. And we, as a major backbone provider, we'd built a big IP network. We'd got some good customers, mobile networks. Thought, what are we going to do? So we embarked on building fiber. We picked Zimbabwe as the first country where we built fiber. And that was, there was a shift in the regulation and law that allowed us to do that in Zimbabwe, but we also had big customers in Zimbabwe, both the telcos and also the bigger businesses of Zimbabwe. So we built the biggest fiber network in Zimbabwe. I mean, we started off building fiber networks in Harare, then a link from Harare to South Africa. but extended that crossing all the cities of Zimbabwe, but also extending into other countries. So going into then north to Zambia, and multiple routes into Zambia, crossing various ways. It's a big river, the Zambezi, so we're crossing various options to cross the river. And extending it further north into DRC as well. So we'd kind of built this spur of a fibre backbone heading up what we called the Central Africa Broadband Project, is what we called it at the beginning. Meanwhile, our friends in Kenya were busy doing something similar. A bunch of companies, and we were just talking about some of the key players behind that, but names like Nushad Morali, Kai Wolf, David Owino were busy building networks, doing very similar things to what we were doing, building from Mombasa to Nairobi, into Uganda, into Rwanda. Around about 2012, the opportunity for us to acquire those networks came up. It was the first time we were in a position to make a big acquisition. We'd looked before at other, ways to scale. We looked at other ISPs that had grown up in Africa, but we hadn't been able to execute transactions. But this was the one. So we came to East Africa in 2013. We closed the transaction, and I ended up coming for 6 months. I'm still here. But then coming to Kenya, we bought a network for a fibre network, but we found we had a very nice data center. In actual fact, as I was doing the diligence on the company we were buying, the people selling thought this data center was like the pig in the farm. I saw it as the diamond, right? It was just one of those things. We gradually grew the data center business, but then we made I'm trying to think what year it was. Must have been 2017. But we made a big acquisition then in South Africa.
Neotel, I think.
Neotel, yeah. So Neotel had been the second national operator, and again had embarked on quite similar strategies to what Liquid Telecom and what KDN had done. So they'd been building fibre networks in South Africa. They'd been partnering initially with the railways, so they'd built fibre networks on the railway lines. They'd landed some of the subsea cables, so they'd helped some of the subsea cable operators land into Durban as well. I think the same thing had happened here with KDN had helped the same operators. Seacom had come into Mombasa. But they'd also invested into global subsea networks. And they built a big data center. They built two, actually, one in Cape Town, one in Johannesburg. But at the time we were buying those, what we've started to see since about 2018, I think 2018 to 2019 and onwards really has been, by far the biggest investment in data centers on the African continent we've seen in those 3 years. It's the same thing happened in North America and Europe as well. I forget which year it was, but there was a turning point when, the data center business changed from people building data centers to host ISPs and web hosting companies and banks. That's how it had been. It's how it's been in Kenya at the beginning as well. Suddenly it changes to, these big companies, we call them FANGs or GAFAs, we know who they are.
Facebook, yeah.
So large tech companies who host the biggest cloud infrastructures in the world, they were coming to Africa and they're still coming to Africa. We've seen Microsoft and Amazon launch in Cape Town and Johannesburg, respectively. And in fact, Microsoft in both. We're seeing other ones coming. I think there's been announcements from Oracle as well. But all coming to Africa with large cloud deployments. This has really changed the data center industry. We're no longer talking of building data centers. We're all talking of building hyperscale data centers, and that's because that's what hyperscalers use. These guys, the FANGs, we call them hyperscalers because they build massive data farms at scale. And we build for them the data rooms and the connectivity ecosystem for them to build at scale. So that's kind of the history of networks, really, I think.
Yeah.
But the other, the point we're at now is you'll hear us talking a lot about Cape Town to Cairo or Mombasa to Kinshasa. We're talking about trans-African routes. So we're talking about data moving from the large financial and centers of Africa, the large economies of Africa. So those large economies is South Africa, Kenya, Nigeria, Egypt, Morocco. These are the big economies. So we're talking about trade between those countries. We're talking about moving data and exchange of digital information. So that's where we're at with infrastructure. But we're seeing, no longer is it a case that all data is exchanged in data centers in Europe, in Amsterdam, in London. We're seeing data between these big financial centers of the continent, these big industrial economies. It's been exchanged in Nairobi, in Johannesburg, in Cape Town, in Lagos. So that's kind of what we're building networks for this mega trend of trade and data in the continent.
Okay, so it's sort of, to sum it up or paraphrase you, you're basically building the infrastructure for the hyperscalers, both connectivity and like the physical actual data centers.
Well, we're building data center for Africans, really.
For Africans, but those are the customers.
They're some of the big customers. Yeah. They're driving the big demand. Scale. They're driving the big bandwidths, and they're driving the large data centers. And people always say, why is the cost of a link between Cape Town and Johannesburg more expensive than a link between London and Amsterdam, even though it's same sort of distance? These are the questions that people ask, and the answers is that the quantity of data moving between London and Amsterdam is so much more. A fibre, once it's been built, it costs the same to build a fibre anyway. It's even cheaper to build in Africa, but once you've installed it, it's very unlimited in the capacity of data it can carry. It's a question of adding incremental costs of equipment. In Africa, we haven't seen enough data moving across the fiber networks to bring down the pricing to the same levels we've seen in Europe. So these hyperscalers, by coming and connecting their data centers cloud to cloud, data center to data center, it's driving down the efficiency of the operations. So it is bringing down the cost for Africans. Right?
Okay, that makes sense. So basically, because the cost of running the fiber is fixed, largely fixed. So if you've got less bandwidth flowing through it, you pay more per.
Yeah.
Okay. Yeah. And Liquid Labs, tell us more about that, because it seems to be a bit orthogonal to your core business.
You look at it's more on top, right? Yeah. So my job is I've never actually dug a trench. I've never laid a brick. Yeah. But we have very good teams who've done a lot of infrastructure build, and I mentioned David Owino. He's one who did that a lot in Kenya. But we've got half a dozen of David Owinos all over the continent who've built big networks for us. And so my job has really been applying on top of that what we do next. So I mentioned, starting at the beginning, I mentioned voice over IP. So we started off with satellite links, but I came in with a particular skill set. I've been working on voice over IP, but we were able to run 12-to-1 compression on voice, which is way more than anybody else is running. We're able to run far cheaper networks, run more voice minutes at a lower cost than some of the biggest networks in the world. BT and others were big in Africa. But all along, my job has been to look at what are the services we bring on top of that network. So things like moving that satellite network into a distribution network, bringing in MPLS. So MPLS networks, I introduced that into Zimbabwe for the first time, and it was introduced in Kenya, I think, by KDN. Totally changing the products that you could get. No longer were you restricted to buying 2 megabits per second lines. You could just have flexible bandwidth. You can tune up any office to any office. So really, I'm still focused on building some of the next things that come on top of where we're at. But I was operating, if you think of, there's everything everybody studies in communications called the OSI 7-layer model. And I look at, level 1 is data centers and fiber. Level 2 is coming over, but it's networks, it's equipment, optical equipment, it's routers and switches. And then over the top, level 3, it's the IP network, it's the routing network. I'm really looking at all those layers above of things. So looking at stuff like IoT, video gaming. We're also looking at our own ways we do our networks. We're looking at network automation. So I'm looking at, how do we do things more efficiently? How do we bring in new services that have not been done before, that are coming on top of cloud, data centers, fiber, and really how we get people doing innovative companies and startups in Africa, getting them to use our network to do innovative things. Because if we don't build a network for the generation of people who are building these new digital products, then what are we here for, right?
Yeah, I see your point. And I'll sort of go off on a bit of a tangent. Actually, not a tangent, but back to what we were discussing earlier. You've built networks across most of the continent. And, conceptually, it seems like a straightforward thing, but you're basically building networks in different markets with different levels of market maturity. So, in Kenya, you have competition. You go to other parts of Africa, it's not as stiff. Then there's regulation. It's completely varied. Language. How do you sort of build these networks with all these variables, sort of?
Yeah, I mean, information is getting better. Yeah. But what started the building of networks was changes in regulation. Yeah. We've had countries that wouldn't give out licenses. You could only build anything with licenses. You couldn't cross borders. But we've kind of got to a stage where some countries are almost becoming more open. I would call Kenya one of those. What we're seeing now, a licensing framework for community networks been released. I think maybe it's being adopted in Kenya. We see in South Africa that happened via a different process, but we see in South Africa it's already happened. There were people who had lots of sort of website hosting licenses, and suddenly the law changed in a court decision, and then they all could be ISPs. So we've seen, this what I call mature markets, and that's borne by when you look at the number of people participating in the internet exchanges in South Africa and Kenya and even Nigeria. It's getting into nearly 100, per internet exchange. And then we go to some countries don't have internet exchanges; they only have one telco. Some of them, but we're seeing it change. So we're seeing Ethiopia has issued second licenses to Safaricom and Vodacom. They're looking to issue out more licenses and privatize Ethiopia Telecom. We saw South Sudan enable us to build fiber, and we came in with the new fiber, the first fiber in Juba, which we just sort of quietly built, and we didn't. There was a pandemic going on, so we never had the big media launch we planned to have. But a country like South Sudan or DRC, which is a massive country, is at a totally different developmental level of the ecosystem than Kenya. And Kenya is Kenya, Nigeria, South Africa. We're seeing the first wave of techpreneurs that started businesses back in the day, who've sold their businesses. We're seeing them reinvesting their gains into other things, whereas we're seeing tech ecosystems in other places are really at the foundational level, where they're having innovation hubs focused on training and la la la. So it is helpful, having learned what you've learned before, in other developing markets than applying to new developing markets that are coming in. But I see things are going to happen faster, right? So what's taken Kenya is ahead because of the investments and decisions and policy decisions that were made 15 years ago. We're seeing changes like that happening in some of the countries I'm mentioning, but I think it'll take 5 years for them to get to this level of maturity.
Okay, so it'll be faster for them to catch up.
I think so.
Okay. So at this stage, we'll take a break forward from our sponsors.
5G is driving a monumental shift in accelerating the digital economy and unleashing digital transformation. It's re-architecting your entire business and reimagining your role in the communications landscape. To thrive in a 5G world, you need the agility and scalability of a modern cloud infrastructure. But siloed, vertically integrated clouds and manual lifecycle management are slowing down your journey to modernization, decelerating service delivery, and cutting into your bottom line. The solution? Transform your legacy infrastructure with VMware Telco Cloud Platform. Our cloud-first approach unifies multi-cloud resources to reduce operational complexity, and cloud-native principles enable web-scale speed, agility, and cloud economics, so you can accelerate innovation and bring new services to market faster than ever before. VMware Telco Cloud Platform gives you consistent infrastructure from core to edge. It's designed with telco-centric scale in mind, like ultra-high performance, support for distributed sites, and the ability to service millions of subscribers. VMware Telco Cloud Platform transforms your network operations with multi-layer automation from infrastructure all the way up to services. It understands the unique network characteristics required for each cloud-native network function and virtual network function, so you can optimize your cloud resources to deliver new services fast across 5G from core and edge. Don't let legacy limitations hold you back. Begin your journey to 5G at telco.vmware.com.
Welcome back to the Pure Infrastructure Podcast, where today we are chatting with Ben Roberts, who's the Group Chief Technology and Innovation Officer at Liquid Intelligent Technologies. So earlier we were chatting about just building networks, and there seems to be a lot of investment in both networks and data centers. My estimate from the data center projects announced, some with the capital raise defined in terms of the monetary value and those without, there seems to be around $300 million worth of data center projects coming up in Kenya alone, give or take. And fiber projects are also getting a lot of investment, with Liquid Intelligent Technologies raising something in the order of $250 million. I think that was announced this week. Mm-hmm. The market seems to be getting red hot. Is there enough space for everyone?
I can't remember the exact number, but the announcement this week was around IFC. IFC are obviously part of World Bank, and they've been supporting us with our rollout. But there's a number which is from World Bank, which is talking about the amount of fund or amount of infrastructure investment that needs to happen in Africa, and it's a lot. And the number escapes me. 5 billion is something that crops into my mind. They're talking around need for 500,000 kilometers of fiber to be built. Now we've got a network of 100,000 kilometers. The infrastructure gap is massive, and there are a lot of people who are enjoying, the benefits of faster internet. Fiber is key. 4G and 5G are helping them get connected early, but there are still probably 300 million Africans who are never going to be close to a fiber in our lifetime. In the whole continent. So it's a long journey, but the competition is good, but it's also competition in what are areas of some regulation, and we have seen some markets where certain segments have been consolidating, right? So Uganda is a great example where they gave out like 5 or 6 mobile licenses, and now there are less. We've seen in Kenya as well. We saw 4 become 3, and then there's now 1 more has come up, but 2 were trying to merge. So there becomes a balance where a particular domestic market is only so big to support so many players in these niche areas. So South Africa is a bigger market, bigger economy. Nigeria is a big economy, but they have not yet reached, certainly Nigeria has not yet reached a saturation point. South Africa, we're starting to see consolidation. We're starting to see smaller ISPs being absorbed into bigger groups. But competition sorts itself out, right? So what happens is if you have not enough, someone new comes along. If you have too much, people merge, people fail. So it's a self-regulating environment as competition goes, I think.
Okay, so there's basically enough room for everyone. And
I would say so. Okay. Yeah, I'm not feeling crowded at the moment. Yeah.
Okay. And then there have been quite a number of projects by sort of like these FANG type companies, the global content companies, to put up cables in Africa. And there has been some discomfort by the fact that, the cables are going to be owned and operated by some of the content carriers, especially thought is around net neutrality and all of that. What are your feelings around like the 2 major cables that have been announced are 2Africa and Equiano? What are your thoughts on these global vendors sort of coming in and competing with the network carriers with these undersea cables?
There can be a perception that they're building them competing with the network carriers, and I'll come to why that perception is perhaps coming about. But the reality is that these cables are being built with a lot of cooperation and depending on the model. I can't go into the models of different ones, but some are going by models of African carriers investing in the cables. Some are going by models of capacity on those cables swapping for capacity on African networks. But if we sort of look at, I think some of the history of this African subsea cable thing, the first generation of African subsea cables were very much built by the major global world telcos. So I talk of BTs and AT&Ts and Telstras, and who are linking continent to continent. And African networks, often the fixed line operators, were participated in those, but the drive was coming from some of the big global networks. The second generation, there was some private investments here, but there was, I think, a lot of the push for the second generation was coming from the bigger mobile networks, particularly in South Africa. But it's the same people, the MTNs, the Econets, the Vodafones, being part of that. But now when we look at global trends, subsea cable capacity is no longer even being consumed by telcos as much as it is by cloud providers. So cloud providers and global consumption of capacity, cloud providers are already overtaken the global telcos and the mobile telcos. So they're the ones needing capacity. They're seeing the growth. They're seeing this trend. They're seeing an Africa that has a number of data centers that will be theirs. They're seeing 2 billion population emerging, and they're seeing 1 billion youth in that population emerging, consuming their digital services. So they're seeing a big future, but they're thinking for what they need and the technologies they're using. They're thinking there's not enough capacity. They're thinking some of those generation 1 cables, generation 2 cables will come to an end. So they've made their investments in the water. It's safe. It's a safe place to invest if you're an American tech company investing in offshore water mostly. But they've made a lot of partnerships with, big operators in Africa, and that's probably less understood. Maybe they are overstealing the publicity side of things, and that does frustrate me a little bit, but I won't go into that. But I think that when an announcement gets made of an American tech company and 5 other African companies investing in a cable, and that becomes a global news item. Nobody knows who those 5 African companies are. It is the one American tech company that becomes the headline. Yes, and then that's bringing the perception. Yeah. And I don't think it's intentional, but I think it's just the nature of interest in these tech companies that they end up, stealing the headline a bit.
Okay, that makes sense. So basically, they have been involving the local ecosystem in their projects.
They have, yeah. But it is, they are. They're looking at a market. They're looking at their needs, but they're also looking at they're looking at and collaborating and discussing a lot of the needs with the local telcos. It's not being done in isolation.
Okay. And now that we're just in general, what are your views on the maturity levels and of the Kenyan market, and what are your views on the ecosystem here?
Kenya is at it's at a very interesting stage. Kenya makes a good. It's a good environment for people to come and test their digital services for Africa, and we're seeing quite a lot of growth in tech startups. We're seeing a lot of companies here, sort of what we would call IT companies, ICT companies, system integrators. We're seeing a lot of them setting up or companies coming aboard. We're seeing some of those things are coming from diaspora as well. They're thinking of maybe they've worked in USA and they're thinking bringing these things. So there's a lot going on, right? And why is a lot going on? Because we've got different parts of what I would call infrastructure are reached a maturity. And I'm not just going to, I'm going to expand the definition of infrastructure to say what I mean here, because we looked at maybe the first wave of people trying to bring up tech companies, and maybe they were struggled with, there were no smartphones, there were, the beginning, there was no M-Pesa, well, one day in the past, but there was no mobile money. We couldn't get product delivered. Certain things didn't work, like deliveries and this and that. But we've now got quite a number of platforms that are mature and working. So one of them is fibre. One of them is data centers. We've talked a lot about that. The next one is last mile mobile access. So mobile broadband is very much ubiquitous. We're seeing a good penetration of fixed broadband. So, Kenya maybe 300,000 fibre to the home connections, probably another 200,000 wide home, wide fixed wireless access connections. Some of those fixed wireless access connections are these guys down there who we call them resellers, but there are many people who have got fast connections as well as the mobile broadband connections, which are there. Then we've got the delivery side. We've got networks of digitally controlled or digitally dispatched cars and motorcycles. And much as they cause problems on the road, they're there. And the digital platforms that have come over, whether they be doing the taxi business or whether they're doing pure deliveries, this is giving a level of efficiency to delivery and accountability and traceability, so we can deliver products. So e-commerce is possible, right? So the e-commerce 10 years ago wasn't possible because we didn't have a proper ecosystem of delivery, and you'd have to have your own riders, and they'd be waiting around for nothing to do, and it didn't work. And then we've got mobile money. You can't ignore, but we've got mobile money with interoperability to allow people to innovate on the top. We've got cloud. We've got as well a large base of smartphones. And then, most importantly, we've got a pretty large base. It can be bigger. but we've got a large base of tech smart Kenyans who are able to adopt digital services and want to adopt digital services. Now, not every country in Africa has that. Kenya has all of that right now. So right now we're going to see an explosion.
And so to sort of touch on that, is that why there seems to be like a lot of friction for talent in the country?
The talent question.
Yeah.
You know, I wrote some things about the recent comments about the talent question in the country. So, you know, back to our friends, you know, the big tech. There are, we have good talent here, right? Yeah. We don't really struggle to fill vacancies when we advertise for a particular technical skill. We, as a technology company, normally fill it with a Kenyan. I wouldn't say it was the same in every country, and we don't even advertise them in every country. If our group function needs a particular skill to support an operation in, I won't shame any countries here, but to support an operation in a country that hasn't got so much skills, we won't even advertise it in that country. We'll advertise it in Kenya, and we'll have a Kenyan do the job, and they'll do it remotely from Nairobi. But of course, the challenge in any labour markets is what it is. Startup companies are coming and they're trying to develop tech, and they need developers. Some of them were complaining that you know, bigger global companies are coming and employing them and paying them a higher salary. I think it's great that developers are actually getting paid proper salaries. I think the more developers we see driving fast cars and living in Muthaiga, etc., the more developers we'll have. You know, everybody will no longer want to become a politician. Everybody wants to become a developer. So it is about you know, you can't just say everybody is on 1,000 bob a day. Right? You have particular skills; they take a long time to acquire. So it's a triumph. It's great. We will then see, you know, highly skilled, highly trained developers who have worked in organized, proper, big software companies who really know how to make, you know, really scalable software, not just apps, right? We've got a million people who can make apps. Great. I can make an app, right? But you know, we need people that can do hardcore software engineering, make products, make ICT products. We don't need to bring in a system integrator to do an Oracle project from India. We see a lot of these things. You know, we can have that base. So we'll see people starting their own companies, starting their own system integrators. We'll see them starting their own software companies, starting their own tech companies, and they'll have the means to do so because they'll have had the experience. They'll have, you know, a few years of working with a good salary. So it's a triumph to the tech ecosystem, and it's also going to be big piece in this continual complaint about foreign money, foreign founders. It's going to be Kenyan founders, Kenyan money.
Okay, so that's basically like a long-term solution to that tension.
It's a piece of the evolution.
Okay, and finally, just going back to Liquid, why did Liquid move from being a core telco to what is effectively now a technology firm?
Yeah, I mean, we ended up having like a number of different areas of business, and you know, we're working very heavily in cloud and really helping people use cloud, but we're also looking at applications on top of cloud, and I talk of Internet of Things a lot. But really, we've got like a data center side, we've got telecommunications, we've got we then in our group as well, we've got payments, and we've got renewable energy. So it's coming together in a group of companies which has got, you know, some complementary tech companies. And so it's part of a you know, a structure at that level, but really it's about saying that we are your technology partner, and we're not just here to provide you this many megabits per second. We're saying that we are we're now able to help people to do their whole ICT digital transformation. We've come quite far on this journey. We've learned a lot about it ourselves. And we're helping big companies to digitally transform. We're helping these young companies to be digital native companies.
Okay, fantastic. I think that's it from me today. Any last remarks?
It's been good. Thanks very much. And it was good to chat.
Yeah.
And thank you for inviting me.
Yeah, thanks for coming on. Thank you for joining the podcast today. We'll see you in a fortnight.
The telco cloud is powering the foundation of modern networks, and combined with 5G and edge computing, transforming everyday communication experiences. But as the number of devices, applications, networks, and clouds grows, the ability to efficiently orchestrate and automate gets harder and harder. And today's siloed or integration-intensive solutions are no answer to these challenges. Introducing VMware Telco Cloud Automation, an orchestrator built to accelerate time to market of network functions and services, while igniting operational agility through automation across any network and any cloud. Create and onboard network functions and services with standard compliant visual tools and instantiate them on demand across any cloud, reducing time to deploy from months to minutes. Redefine operations with end-to-end visibility, repeatability, and multi-layer automation from infrastructure and Kubernetes clusters up to network functions and services. Build and apply policies that enable auto-operation framework, transforming operations and customer experiences with closed-loop actions and intent-based workload placements from the network edges to the core, and from private to public clouds. Streamline your orchestration journey with Network Function Manager, Network Service Orchestrator, CAS and infrastructure automation, pluggable and standard compliant components adapted for any multi-vendor architecture. And leverage native integrations, including VMware Cloud and Tanzu Kubernetes, to ensure operational and management consistency, faster innovation cycles, and maximum resource utilization. Further simplify interoperability by using VMware Telco Cloud Partners, limiting integration risk while promoting a best-of-breed architecture. VMware Telco Cloud Automation, bringing VMware's years of cloud management, networking, orchestration, and automation expertise to your telco cloud evolution. To learn more, visit telco.vmware.com today.